How do the costs of products paid to your vendors or suppliers affect your taxes? I'm Aaron Hall. You can learn more about me at aaronhall.com, and please see the disclaimer below. Imagine you are a business owner and you're selling products, some sort of goods. Well, as you know, some products you might pay 50% of your sell price or your list price to a supplier who actually sells it to you. Or maybe you spend 20% with one supplier and 10% with another, and then you have to assemble it, and then you sell it. The question comes up, how are taxes calculated, or income taxes, when you have all those costs associated with these products? Well, let me do a real example. Let's say you have a $100 wheelbarrow that you sell online, and you get the tires from one supplier for $10 per wheelbarrow, and you get the other parts of the wheelbarrow for $40 per wheelbarrow. So you get $10, or you spend $10 for the tires, you spend $40 for the other parts, and then when you sell it for $100, you'd have a profit margin of $50. Now, maybe you also have some shipping and handling on that, but at the end of the day, here's how it works. Taxes, income taxes, are based on the profit that you earn at the end of the year after accounting or adjusting for all of the expenses that you had. So, in this simple example, if you only had one wheelbarrow sold that year, you would have had $100 of income. You had $10 go out to the wheel supplier, and you had $40 go out to the supplier of the other materials. That means you had a $50 profit margin. That is what would be considered for income tax purposes. If you had, for example, $100,000 in in profits, then you'd be looking at paying income tax on that. So at a real high level, that's how it's figured, which means it really doesn't matter from a tax perspective what your costs are related to the products. What matters is what is your profit at the end of the year. To learn more, check out my other videos or visit aaronhall.com.